Well, hello, good morning, and welcome everyone to the AgYield War Room. It is Monday, September 23rd. If you don't know who I am AgYield Marketing Manager and everyone's favorite backup host, Jack Coakley, filling in for Dan yet again. It seems to be my new job. I'm going to probably move into his office while he's gone. So that'll be exciting for him to learn on the way back. Yeah, as always, feel free to join the discussion. Post a comment anywhere you're watching the show today. We'd love to hear from you. Talk about the second day of fall and what you got planned for that, or anything that comes to mind. You can always reach us at info@agyield.com. Coming up now is my second attempt at reading export sales announcements. So here we go. There was a reported private exporters reported sales of 165,000 metric tons of soybeans for delivery to unknown destinations during the 2024-2025 marketing year. And that's just me reading off a piece of paper. So let's go to a real expert who understands the markets. Ryland, what are the overnight numbers looking like?
You did great, Jack. This is perfect. Right now, coming in, we got D's corn up 6 1/4 at 408. Nove beans at 10.26 1/4, up 14 1/4, and D's wheat 5.79 1/4, up 10 3/4. So a little bit of strength overnight. Stock indices right now looks like we got Dow up 37, S&Ps are up 9 3/4, and Nasdaq up 41. So a lot of green on the scene this morning here.
Absolutely. Let's shoot it over to Dustin to get the conversation started this morning. Dustin, what's on your mind?
Yeah, thanks, Jack. Yeah, obviously finished off week at the end of the last week, and we were, looking at probably some market pressure, going into that time frame. Starting off strong, all of a sudden beans, coming out of like failing to really break back down below 10. Now they've got a chance to go, maybe take out recent highs again. Yeah, I think that's the question that we have is we've heard some really good bean yields to start, but, we can't imagine that this really kind of dry finish to the season didn't impact yields in the end. It's just by how much. So we're still looking for more anecdotal, yield evidence and get further into harvest before we, make any major changes to that assumption. Outside markets, I think that's a thing to kind of consider. We still have gold at all-time highs, stock indices at all-time highs, and there's just some underlying general support from a weak dollar denomination. So if we get through this harvest without having like just a blowout record yield on beans, for example, I still think there's still that underlying bid. Like we're seeing that 165,000 metric ton sale today. We should be seeing sales like that this time of year. But if we just keep getting confirmation that demand is still there and still supporting these prices, maybe it is capable of staying here for a while. Justin, you have any thoughts on that?
Yeah, no, I agree. I think we have to get through harvest and see what final production number we're working with. It's going to quickly turn to South America. It's been really dry. Obviously, we're all waiting for the monsoon season to kick off. Excuse me. It's such a big part of our global balance sheet, how South America performs. So if we've digested a big soybean number in the U.S., we're finding demand. Funds are short. To Ben's, we talked about this earlier. To Ben's point, they're probably starting to get kind of frustrated. You're hanging above some moving averages. You're not getting paid to be short right now, outside of earning the carry. You could start to make the argument that we put some lows in here and we build in or at least maintain these levels, see what South America looks like. I don't think there's overwhelming evidence right now to say that we have to go sharply lower. That could obviously change, but we've traded, we talked about this many times, but the, pro farmer numbers came out. We've traded some pretty big numbers, I think, in corn and beans. And we've had one of the worst endings to the bean crop that I can think of. Now we'll see, like early yields were fantastic. Now were those coming from, I'll take our farm, for example. We were, 87 bushel beans. Were they 100 bushels before that? Now we had, Northern Illinois, we were catching, we caught some inch rains there that a lot of places didn't. So I'll be curious when we when we get into more and more fields, what that looks like. We do have lots of clients that, Central Illinois, Central Indiana, maybe they're a third done, and in beans, I think we're kind of averagey, even below their APH. So I don't think that's what's penciled into the current soybean price. I don't think we've penciled in a average type yield. I think we're penciling in a record by 2 or 3 bushels. So I think we're gonna have to. The bean market, I think, rightfully is rallying. It's gonna have to start getting some proof that the government number's right, in my opinion.
No, yeah, that's great stuff. Ben, I see you nodding your head. You have something to add?
Yeah, just I think it's encouraging. I look at markets from a pretty simple view, and for over a year, when we've tested the 50-day moving average and we failed, managed money has come right back in and put their position back on. They've kind of covered into those areas. We saw that on a bigger scale, a 200-day this summer, and we flirted with those areas for the better part of the last 2 weeks in both products, and there has not been a full-scale assault to try to put those positions back on. It doesn't mean it doesn't happen this week, but it does feel like they're not rewarding the sellers on breaks. I think that's encouraging. If you went home short from Thursday and Friday and felt really good with low range closes in both corn and beans, and you wake up this morning and you're at the very high of the range for soybeans, and out 6 or 7 cents on corn, it kind of perks you up a little bit. So, looking at market reaction to those things, I think is fairly important. It doesn't mean it wasn't overdone overnight and we don't sell off today, but we're not seeing, as of right now, we're not seeing the managed money contingent getting rewarded if they're selling it, or maybe they're not selling at all, looking for places to cover. As the agricultural sector is the one that's really kind of struggling in the overall commodity sector at a time of the year where you would think that the seller would get rewarded.
Gotcha. No, that's good intel. Anything else in the grain department before we move over to Ryland with the meats?
No, I think we're still looking for direction to start the week, Jack. I mean, there's still a lot to be known here as we get further into harvest. So I would just say, for AgYield clients, when you're starting to get more and more yield data, making sure that we're updating AgYield and seeing how that relates to what we've been counting on for yield, for crop insurance purposes, for margins purposes. I think, hard data is very important, and that goes for everybody around making margins-based decisions. So if you're coming out way ahead of your average yields, like Justin, you mentioned some clients that are below average in Central Illinois. I've also heard some that are, really good too, and in those cases, if you're surprisingly large yields, you go penciling in something higher than you were expecting, and that moves the needle on margin. Regardless of what we're saying here today, it might be your chance for profitability now. Right? If you're getting 90 bushel bean yields, for example, that moves the needle into profitability very quickly, and I've actually heard that. So
yeah, 100%, and also to remember that the month of October for crop insurance, it's the biggest put option expiration in the marketplace. So, a lot of times you can trade a different way because of how crop insurance is affecting so many bushels, acres. And then the market, like we saw this last year, right? The market completely changed after crop insurance. So
yeah.
To your point, if you really have to look at your own individual situation. And if, you do have big yields, which a lot of people obviously do, this has been a godsend, this rally in price and the discovery of higher yields. So I 100% agree.
I will say something I thought kind of rather interesting in beans. You go look back at Friday, beans were really weak to start the day, right? And I think a lot of that was to do with currencies. I mean, you had the Brazilian real down sharply overnight, and beans were too. And beans just acted, we ended up closing unchanged with the weak currency staying there. So, you see beans tend to trade without new information, kind of along with the currencies. and just kind of reprice, according to where we are in the world, competitively. So I thought that was kind of interesting that we are maybe starting to trade some new information, or at least the market maybe starting to worry about yields, that we're starting to see some lower yields. So you look at the real overnight, again, was lower all night, and beans and showed strength right into the face of it, and traded well above the 50-day moving average. So it will be kind of interesting to see how they react to that today.
Excellent. Thanks for that, Jason.
Yep.
Ryland, what do you got in your department?
Yeah, so I think everybody's just waiting to see if how the cattle on feed report was going to come out here on the cattle side of things. We had a really pretty good performance in futures overall. We really tightened things up. Looks like cash trade was between 182 to 183 in Kansas, 183 Texas. So I think these numbers were just a little bit better than what we were really expecting, and right into the report too. It was kind of a neutral report overall, so it just kind of feels like kind of the near-term factors are probably what's going to lead, but we got a higher cash market. It looks like beef market is trying to firm up a little bit. It was coming in just slightly higher, both choice and select, Friday afternoon, and we saw a pretty decent up in commitment here at 1,735 contracts. So it seems like we got a lot of new buying starting to come in here, and I doubt the report is really going to shake too much loose. It was just still exactly what the market was kind of expecting. I mean, you could make the case that placements were a little bit lower than expectations, but I don't think it's enough to really base too much on at this point. It seems like the market kind of saw this one coming. So right now we're just going to be seeing if there's any kind of early cash indications. With likely not today, but we'll hoping for some follow through here on the livestock side. On the hog side of things, I think everybody's just kind of waiting to see what happens in the hog and pig report out later this month. And we've had pretty consistent higher highs and lower lows, and the market's kind of knocking on the door of these higher price levels. So, I mean, this is obviously a really good opportunity, I think, to try to lock in some margin, maybe look at hedging a little bit further out, especially off the December, where it's just a typically seasonally weak time frame. So I think that's what we're going to be looking at this week. Like I said, I think the talk of the town is really just the performance in the futures in the cattle market last week. So we'll be seeing if there's any kind of follow through here.
Thanks for that, Ryland. If there's no last parting shots, I will take this moment to say that, if you love the show half as much as we love putting it together, give us a like and subscribe on YouTube. It helps us out with the YouTube algorithm. It gets our show out to a larger audience, and it keeps you up to speed on everything we're doing over here. So shoot us a like and subscribe. It doesn't cost you anything, and it means the world to us. We appreciate everyone who tunes in every morning here on an everyday basis. Of course, as always, we are streaming live on X, Facebook Live, and YouTube Live. Thanks again for having me, everyone. I'm going to absolutely nail those export sales announcements going forward. Pretty excited about that. Everyone have a great start to your week, and we'll see you guys tomorrow at 8:15 Central Time.
Thanks, Jack.
Thanks, Jack.
Take care.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.